All right, morning everyone. Welcome to another episode of Trading Bitcoin with your host, Tone Vays, coming to you live this Thursday morning, July 1st. Another month is, of course, over, and we're going to take a glance at the monthly chart as well, now that that candle has fully closed. Just a reminder, because I never do it, hey guys, like, subscribe, share, and there will be a private Q&A after this. I was supposed to put up the private Q&A for anyone to register like last night, but I forgot to tell my web developer. And that's happening this week. It's going to happen today. This Q&A, this private Q&A from today will be published in a couple of days over the weekend, Saturday or Sunday. Mostly depends on whether I do a Q&A on Saturday. If I don't, then we can get us out a little bit early. 1 second, let me just send a quick message. Okay, and let's go to the charts. Let's go to the charts. We're gonna go to the monthly chart. We haven't looked at the monthly chart in a while, and as you know, everyone is panicking that we had a second consecutive month of a red candle. I don't think that means all that much. I really don't put much stock in it. I mean, look, right here, we did not have a second consecutive red candle. We had a green candle that followed the first red candle, and we were still in a year plus long bear market. Here, on the other hand, we did have two consecutive red candles, and that's where it all ended, and we started to go up. So I really don't understand the big concern over two bad months in a row. I don't think that means much. Technically, this is 3 red months in a row, and starting on the 4th, because that was also a red month, the consolidated month. Now, I am, of course, looking at regular candles. We can look at the Heikin-Ashi candles, which a lot of people are also looking at. And on Heikin-Ashi candles, yes, we've never had a single one, but remember, in the past, right here, this was a down month, yet it was a bullish candle. So how did that help you? This here, the first candle was a red month. So I wouldn't put too much stock in this, okay? I believe the downside is coming to an end, but not before a high probability of a capitulation move. I don't believe we had a capitulation move. What is a capitulation move? Well, we're looking at the Heikin-Ashi candles here historically, and this was not as bad as it looks, but this is a capitulation move, right? Look at the range of this candle that ends the drop. That is a 40% drop candle, and we're looking at Heikin-Ashi, not regular candles. Now, what about this candle right here? Well, here's one more. This is a giant candle that has to come at the end of a run. That is a 56% drop candle. There was one more capitulation move. That wasn't even the end of it. There was one more right here. That is a 43% capitulation candle that clearly ended the move. Let's go to the last bear market that we had, right? The last bear market in real time, this was also a capitulation candle. You can see how the candle that ends the bear market is a 47% drop candle. Now, these candles occur after already a considerable drop in the price of Bitcoin. And then, of course, we had the monster of all capitulation candles taking place in March of last year, not even that long ago. We have not had one of these capitulation candles. Sure, you can go on talking how the candle 2 months ago was a 50% drop candle, and the candle in this past month, according to Heikin-Ashi, was a 40% drop candle. But these were candles at the top. They weren't candles after a 50% drop had already occurred. And that is what we're missing. We are missing one more big drop. If we go to the regular candles, you can see it. Now, the really big drop happened in this original month. the same month that made the top made the low. But even after that, we had this capitulation candle. So if I don't want to do percentages again, but you can see it. You don't need me to tell you what the percentages were. You can see the big capitulation and quick rebound. You can see the big capitulation here, quick-ish rebound, only to have a second capitulation with a quicker rebound that finally ended the bear market. You can see the big capitulation and the low came just like a week or two later. So if this month was, slightly, off by a week or something, then this would have been the ultimate capitulation, and then you start to go up. I was skeptical on this rise. Everybody knows I was skeptical of this rise. And this is a huge capitulation that led to the upside. We have not had this. There was no capitulation this time. And even in the 2013 double top of the bull market, we still had a capitulation candle that crushed people for a 50% move in the latter stages of the drop. Right there, 40%. Okay, same thing here. Look what happened at the very end. At the very end, you can put these 2 months together pretty much. It was a 60% drop after a 50% drop or whatever it was. There was like a 70% drop, and then there was another 50. Look at this. There was an 80% drop, and then there was a 50% drop, right? So we're still waiting for that final capitulation drop. I'm waiting for it, right? And if I don't get it, that's fine. I will just buy back in on the move up. Now, on the move up part, I'm going to leave it here for now because it's only the first day of a new month. But if the month is halfway in, I can move this entry down to the top of the current month's candle. So that is what I remain cautious on. To me, on a weekly scale, this was clearly not a capitulation candle. This is verifiably true. This is not a capitulation candle because we have already traded, or currently the current week is already sitting lower than the close of that candle, and we have already broken the low of that candle. So this was not a capitulation because in capitulation, people get wrecked. They don't come back in the market. They don't get another shot to buy in at a lower price to make their money back. That's not how capitulation works. Capitulation works in a way that you can't recover. Okay? That clearly has not happened in this drop. It hasn't, because you have the ability to buy lower than the wrecked prices. If you got wrecked right here at the very end of 29,000, it is possible you're not able to buy back right now, but most people are able to buy back right now without much of a loss, very small loss. Okay. And therefore, this keeps me concerned. The weekly scale is not telling you to go short yet, but if next week or the week after starts trading below $32,000, that would be a red star candle taking us down into another MRI buy, and we're going to drop below the next moving average, which is a huge concern. My next level of support and my perfect buy the dip remains in the low $20,000 range. If it gets there, man, I am going to be looking to sell whatever I can. Though at this point, I might be down to a kidney. Okay, now here's the daily chart. Obviously, hindsight is always 20/20, but the def cross was not hindsight. The def cross was an actual thing. Now, it didn't give me the perfect screaming shorting opportunity because the price happened to turn a few days before the def cross. What does it mean if the price turns a few days before the def cross? It means that the environment is weaker than expected. What does it mean that we did not reach the moving average before turning 2 days ago? It means the environment is weaker than otherwise expected. These are not bullish signs. These are bearish signs. So please be aware, the fact that we did not touch the moving average is a bearish sign, not a bullish sign. Okay, more concerns. I'm not guaranteeing that the price is going to drop below the $28,000 mark, but I have absolutely nothing to like put my bullish flag in. There's nothing bullish about this chart. We are consolidating near the lows. That is bearish. We could not touch the moving average, which continues to decline. That is the 50-period moving average. That is bearish. The 128 has turned and started declining. That is bearish. We will probably end up with another depth cross between the 128 and the 200. I don't know what that means, really. I don't recall the history of how relevant it is for the 128 to cross the 200. It doesn't seem to be all that relevant, but it's still not good. Still not good. The MRI has just flipped onto the bearish side, which does not yet tell you to go short. I actually hate the fact that my potential projection calling for capitulation is so near. I would rather have this come in about 6 or 7 days from now in order to line it up with the MRI. That can still happen. We can still consolidate for the rest of going into next week and then have the drop. But I just don't see anything bullish in this chart. The only thing bullish in this chart is literally the funding rate. And yes, I'm still using the BitMEX funding rate, and I shouldn't be using the BitMEX funding rate because there's not much volume on the BitMEX anymore. A lot of people have moved over to Bybit, I believe, or other exchanges. So I should be using something else, but I kind of like it. And this is like the only bullishness here, but it still has not made up for all the opposite side of the trade that was happening prior to what just happened. As far as other indicators go, here is the RSI. The RSI is leaning bullish. That's good. Not enough for me to change my mind on what's happening in the price action. The MACD is also leaning bullish. The CMF, however, is not leaning bullish, ever so slightly, but that could go negative real quick. And the stochastic RSI, why do I even have the stochastic RSI? I'm not a stochastic RSI guy, so let's not bother with that. Okay, let's go to the lower level time frame. The hourly chart. Oh, wow, look at that. The hourly chart. I did not even know that. I restarted my computer, so that's why all my oscillators are back. Beautiful, beautiful buying opportunity on the hourly chart at 6 o'clock in the morning, New York time. So almost like, well, some people are, I mean, Bitcoiners don't really sleep, right? You had a beautiful buying opportunity that was preceded by a perfect sell opportunity on the MRI top. Now, this buying opportunity is over now. Okay, this is a 1 hour buying opportunity for a 1 to 4 candle correction. It ran into the 200-period moving average, and boom, it's over. So if I had bought on this MRI as a short-term trader, I would already be exiting that trade. Yeah, everyone is super bullish using Wyckoff, but remember, the moment this price goes below this line, the Wyckoff pattern is done. It's done. I don't see how they can fudge it anymore to make it fit. It was fitting absolutely beautifully, but it needed to go higher. And 2 days ago, it stopped going higher. So I don't see how the Wyckoff pattern applies if it goes below the 31,700 range, but we'll see. We'll see. But again, I'm not a Wyckoff expert. GBTC is already trading. I want to see the premium go up. The moment you see, I believe that the bull market in Bitcoin will begin the moment GBTC premium goes positive. That is my barometer. I want to stick a line in here somewhere. I want to stick a line at 0. Where's 0? Oh, wait, I can just change this line after. Okay, this. The moment we go above this line, I believe the bull market begins. The next bull market begins. Yeah, but, oh, man, I really wanted 0. My coordinates are on the other side. So, a little lower. Smidge, right there. Right. We break this line. I believe that's where the bull market starts. When do we break the line to the downside? right there. That's pretty much where the bear market began. February 22nd, right? And I believe the bull market would begin once we break that zero line, because the moment we break that zero line, people will probably start buying into the GBTC trust, into the trust. And when people start buying into the GBTC trust, Grayscale will start buying Bitcoin from the miners, which they were doing in huge amounts, leading to, you know, Bitcoin shortages and buying, which currently don't exist. No, of course GBTC will have a premium again. Absolutely it will. Unless the ETF comes out first. Unless the ETF beats it to it. And if the ETF does come out, then there'll be arbitrage between GBTC and the ETF, and then it's just going to flatline at zero. Oh, wait, if I do this, everything moves over. So that wasn't very useful now, was it? Man, anyway. Hold on, let me see. Yeah, that's -1. Yeah, it's over here. Right there. That's around the zero line. All right, we're going to leave it there. I'm going to try not to. Yeah, I hate these like double line things. I never released this code publicly. I don't know. I'm just kind of lazy sometimes, guys. Too much going on with the conferences to organize. Gold. I still think gold, well, gold probably has now bottomed again. And I still think gold's going to go to new all-time high this year or early next year. Oil, I'm not surprised we went to new all-time, not all-time high, but I'm not surprised we went to a new multi-year high in oil. I've been bullish on oil based on chart patterns. The S&P 500 has been one of my better calls this entire year. This kind of sucked because of the dumb Fed statement, but which they didn't even do anything. And I explained why that happens. And right now, I would be looking to take my profit, probably tomorrow. Tomorrow, there is an MRI top on the S&P 500, and therefore, it's a good opportunity to take your profit. S&P 500 weekly still looks good. Tesla, wanted to pull up Tesla. Tesla hit an MRI top a couple of days ago. It is in a 1 to 4 candle correction. This is a consolidation near the top. I think Tesla has a high probability of breaking out. Well, look at the moving average consolidation. The moving averages are all going to start trending upwards soon. And Tesla has a high probability of breaking out here. Okay. And all right, guys, don't forget, the Financial Summit is coming to Dubai on November 6th to 12th. This is where traders, hedge funds, family offices all meet and network together for 6 days, 6 nights in the desert. Great event. It's getting there. It's going to probably sell out. So check it out. Okay. Get a lot of free goodies. When you sign up, there'll probably be some more. Willie Woo should be coming on my show next week. Almost forgot about that. Keep you posted on Unconfiscatable and its return to Las Vegas in March. And we are still working on understanding Bitcoin in Dubai and also Malta. Oh, mempool. There's going to be a 27% difficulty adjustment upcoming in the next couple of days. Right now, the blocks are very, very slow, so transactions are piling up. But once another 48 hours go by, we still got a few more blocks to go. And once that happens, there'll be a huge difficulty adjustment, and blocks are going to go fairly quickly. So I wouldn't be too concerned about that. If you want to wait a couple of days before sending some Bitcoin transactions, probably a good move to save money. Thank you, Steve, for your generous donation. All right, guys, I got to get the private Q&A up and running. We've done the stream now for 20 minutes. I think I covered it all. I am very cautious right now, and There is confluence of MRI bottoms currently on the 30, 1 hour, and 4 hour. I didn't even look at the 4 hour. Quick peek at the 4 hour. Waiting on MRI. Yep, MRI had a 4 hour along with the 1 hour, but that trade might be over already. Look, I don't like this. I don't like this 4 hour chart at all. It is now trading lower than the prior two bodies. That's it. The buy could have been perfectly timed off the 1 hour chart, and 1 to 4 hour correction led to just a couple of hours, and we're already going down. So I would no longer be in this bullish trade on a 4 hour, unlike this one. See, this 4 hour bullish trade turned out to be significantly better, but not this one. All right, guys, that's it. Thank you all so much for watching, and I will see you all on the next one.